Trading futures and options involves significant risk and is not suitable for all investors. You should consult with your financial advisor to determine if such trading is appropriate for your financial situation and experience. ITG Capital Management LLC and its affiliates make no guarantees of performance, accuracy, or profit from the use of any trading system, signal, or algorithm, including ITG Quantum AI or any educational strategy. In this video, we continue our deep dive into how minor adjustments in the setup of ITG Quantum AI can lead to major differences in both behavior and final results. This is an important lesson, especially for traders looking to amplify profits per trade or load up on positions earlier, hoping to increase net returns. We begin with the same base setup used in our very first video. The original profit target was set at 30 ticks or $150 per trade on NASDAQ. But what happens when we increase our target by $100 from 30 ticks to 50 ticks? Well, as you'll see in just a moment, adverse market movement against our position quickly wipes out the daily risk limit. The trade didn't have the momentum to reach a higher target, and the larger exposure backfired. Next, let's try something more modest. We increased the profit target by just $50 from 30 ticks to 40 ticks. And yet, the result is the same. A similar market reaction knocks us out of the session entirely, hitting our maximum allowable loss. Now, we return to our original 30-tick profit target and instead modify the buffer for adding positions. Originally set at 10 ticks, we now reduce it to 5. In theory, this should allow us to add positions faster, increasing the trade size sooner and amplifying profits if the market moves in our favor. And initially, it works. We hit the $10,000 profit milestone faster than in previous tests. But then, at 8:30 a.m., a high-impact news release hits. With our buffer too tight, ITG Quantum AI maxes out its open positions too quickly, and when the market moves against us, the session ends in a loss, once again hitting the daily risk threshold. This test clearly shows how even small changes, whether to profit targets or buffer levels, can completely flip the outcome of a trading session. In fact, a session that previously ended with $12,700 in net profit is now a losing day, simply due to these seemingly minor adjustments. So what are the takeaways? For NASDAQ, a 30-tick profit target strikes a smart balance between commission costs, fees, and per-trade returns on e-micro contracts. For the S&P 500, consider 12 ticks as a reasonable target. If you're trading e-mini contracts, you might even lower these targets slightly, allowing for faster entries and exits with reduced risk exposure. As for buffer settings, on NASDAQ, avoid going below 10 ticks. In fact, we recommend increasing it to 20 or even 30 ticks to prevent the algorithm from loading up all positions too early. On the S&P 500, never go below 4 ticks, unless you're using our specialized ITG Quantum AI version 4, which is designed specifically for ultra-high frequency trading environments. Fine-tuning these values is not about chasing more profit. It's about finding the balance that matches your risk tolerance, market conditions, and trading goals. Futures trading involves substantial risk and is not suitable for all investors. Losses can exceed the initial investment. The results shown in this video are hypothetical and based on historical tick data in a simulated environment. They are meant strictly for educational purposes and do not guarantee future performance. Always conduct your own testing and consult with a licensed financial advisor before using any algorithm in live markets. To learn more about ITG Quantum AI and our training programs, visit www.itgedge.com. Thanks for watching, and we'll see you in the next video.